We got to get into this Datadog deep dive because this company. So, if you were here 2 weeks ago, remember I kind of made the case of I noticed some insider transactions going on that I found on the symbol page here on Seeking Alpha. And it was some pretty large buying from an officer of the company. Just to remind you of that, his name is Matthew Jacobson. It has Icon IQ, I think it was called. And funny enough, I was looking earlier today, and even after our episode, I believe it was after the episode, he made a third purchase. So I only pointed out the first two, and then we got another filing that he purchased even more. I haven't seen any more purchases from him after that one. And then the other, statement of ownership that changed over there was somebody got awarded stock option compensation, converted shares, but they sold it immediately. So something to keep in mind. So Austin, why don't you go ahead and kick us off? We said we were going to do a deeper dive of this company. Why don't you just kind of give an overall umbrella approach of what Datadog is all about?
I'd be happy to. So Datadog is a monitoring and analytics platform for developers, IT operations teams, and general business users that are working in the cloud. Their platform integrates with over 500 input companies, think like GitHub or SQL or even Evernote, to provide metrics, tracing, logs, and other important data points to their users, right? So through Datadog, developers, operators, and business leaders can have a holistic view of the entire company's technology stack, no matter the cloud provider that they're using to host it. The list of use cases this company offers to their customers is really long, but I think it's important to name a few of them so you guys have a better understanding of exactly what this company does, right? So the types of monitoring we're seeing that Datadog does, we're seeing infrastructure monitoring, application performance monitoring, log management, user experience monitoring, network performance monitoring, database monitoring, security, incident management, developer testing, and pipeline monitoring, all on this integrated data platform. Josh, I'm not sure if you have this photo, but if I'm assuming we do, there's a bunch of different, we're seeing infrastructure, log management. Can we throw that up so the people in the chat can kind of see more of their products here? Exactly. This is perfect. So if you go to Datadog's website, you click on services and products, things of that nature, this is what pops up, right? So just so you understand how vast and how many actual software products this company sells or kind of license seats to their customers, this is it, right? These software products are applicable across countless industries as well, including financial services, real estate, healthcare, education, and even gaming. It's huge. It's a lot. Daniel, is there any feedback or input you want to jump in here?
Yeah, I think to sum it up in like super layman terms is this company provides their customers a dashboard, a one-stop shop where, building a website, building games, building whatever, you have all these different vendors, all these different apps that you have to use, and you piece them together like a puzzle, right? This company takes all the data points that come out of those vendors, consolidates them into an easy visual dashboard to say, hey, we just had a blip of an outage. Well, where did it come from? Right? They want to know exactly where it came from to save a lot of time, save your team's productivity work. I mean, they have all the things that they're working on, but this is how they do it. They implement Datadog. They immediately see, oh, vendor XYZ, they had an outage blip. Boom, fix. Let's keep it going. That's what
100%. 100%. So how does Datadog make money? Datadog is your run-of-the-mill software as a service company. They allow customers to buy seats inside of their platform, and those customers pay them a monthly bill to maintain their seat. So, for example, the cost per enterprise seat for their APM and continuous profiler product, which I believe is the third one, right in the middle on the top there, is $40 a month, right? $40 a month per seat. So let's assume you have 20 people on your enterprise team that need access to the software product. That's $800 per month in revenue for Datadog just for this one product. Now let's multiply that figure by 6 because that's, a third of their total product offerings. Maybe you got a bunch of different things you're working on as an enterprise. We're now at $4,200 a month in revenue paid to Datadog for this hypothetical customer. That's $50,000 a year in annual recurring revenue that Datadog is now recognizing on their income statement because of the different products that they're offering, right? And this is recurring. So now that we understand who they are, how they make money, and things of that nature. How much did they make last quarter, right? What's the bull case? What's the bear case? Why would someone get excited about this company? So starting with their most recent quarter, the third quarter, I believe the earnings came out just last week or the week before. Revenue was 436.5 million. This was up 61% year over year. Operating cash flow was 83.6 million, with 67 million of that being recognized as free cash flow. This took Wall Street by surprise, and we'll get into that in a little bit. They reported 2,600 customers now paying them more than $100,000 in annual recurring revenue. This is up 44% year over year. And they offered us some guidance for this quarter that we're in right now, right? Fourth quarter. Revenue of about 450 million, bringing their 12-month 2022 total revenue to $1.65 billion. Josh, do you mind throwing up the screenshot of their financial, their customers, and their platform? Yes, Stephanie, good point. We'll definitely get into that. So before we jump in further, though, I kind of want to, I saw this on their investor relations website, and I think it does a really good job of kind of giving you a snapshot of their business, right? We see the trailing 12-month financial revenue. We see kind of how that revenue has grown. We see their operating margin, their free cash flow margin, that dollar-based net retention rate being over 100%. That means that on an annualized basis, they're now monetizing 30% more on the initial contract that they had sold a vendor. So in our example earlier about that $50,000, let's say after 12 months, I say, hey, great, I'm this hypothetical customer. I love paying Datadog for these seats. Oh, and they want me to buy more products for them. Count me in. It's a great platform. Here's 30% more money than that initial $50,000. So that's what that means. Customers, right? 22,000 with 2,600 paying them over 100,000 a year. And I think the platform adoption, right? That's the interesting point to me. We're going to talk more about how these numbers have changed recently, but 80% of customers are using 2 products, right? Not just one. 40% are using 4 products, and 16% of customers are using 6 or more products.
Real quick before we move on from this. So under
Yeah.
customers, actually yesterday I was so their CFO David Opsler, I believe is how you say his name. He was presenting at Credit Suisse's 26th annual tech conference, which might be their last tech conference, but so he said, and if you look at customers over $100,000 in ARR, you'll see that the average of those customers, those 2,600 customers, the average is actually around 600,000. So
Wow.
that's impressive.
That is really impressive. And actually, I have some data around sort of their guidance to those 1 million and even 10 million plus customers down the pipeline. But maybe jump to the next slide for me. Josh, I think we might have another image here of their annual revenue and sort of how their quarterly revenue has moved in the right direction. So, again, just make sure we're on the same page of how this company has grown over the last, call it 2-3 years now. You can see it's grown exponentially, right? And that's what happens when you have a sticky product and you're offering a software as a service, this awesome dashboard that is so robust and so needed from a strategic perspective, strategic spending, right? You think about macro headwinds. We saw this with CrowdStrike, whatever. The last thing someone wants to do is say, let's get rid of the platform that tells us everything going on with our business, right? Let's get rid of that. No one's saying that. No one's saying that at all. Next slide for me, Josh, that'd be great. Nice. So this is that customers, right? We're seeing how that has sort of changed over year to year. And even now in that orange section there, that is year over year for this specific quarter, right? So Q3 of 2021, we saw 17,500, and Q3 of 2022, it's now 22,000 customers. Absolutely incredible. And then the next slide shows us the number of customers with annual recurring revenue over $1 million a year, right? That's $216 million in ARR. Like that's just crazy to me. And that was last year. What's that going to be now coming this year as we'll see their earnings, I think probably in February, disclose that. Now you get to see the number of customers with ARR over that 100,000 figure, and as a percentage of total annual recurring revenue, how that has changed and increased. Now, let's kind of back out for a second and talk about the bull case, right? Why would someone be excited to invest into Datadog? I've got about 3 or 4 reasons here. The first one is they're operating in a clear secular growth trend of migration to the cloud, and you pair that with this major digital transformation. More and more companies are spending larger percentages of their budgets on cloud infrastructure. I think I saw it was a 65 billion with a B, total addressable market for Datadog by the end of 2024, right? So it's a clear secular growth trend. People are spending in more money, more percentages of their budget on cloud infrastructure. The next thing is they're selling a product, as to what we said earlier, that seems to be strategic, right? It's a need. Similar to cybersecurity, not the first thing executives are thinking of getting rid of when they have to figure out how to save money on the spending side if macro headwinds start getting worse and worse, right? The last thing these people are saying is, oh no, let's get rid of the platform that gives us all this information and data as to how our business is running, right? That's not exactly the first thing that comes to mind. Next is to Daniel's point earlier, talking about these big deals. The management team shared very positive commentary during their last earnings call around their customer pipeline, these big $1 million plus deals, and the dollar-based net retention rates remaining very high, which could lead to outsized revenue growth in 2023, right? People are hoping for this 30 to 40% range, and I think that is a pretty fair assumption. Finally, their land and expand strategy is working, right? They added 180 net new 100,000 plus ARR customers versus 170 last quarter, right? So not only are they adding more customers, but they're doing it faster than they were just 3 months ago. They're bringing that total up to 2,600, right? Up 44%. But the mix, and this is what we talked about earlier about the number of products each customer uses, right? So the mix of total customers using 2 or more products increased to 80%, right? So from 79% last quarter, moving in the right direction. 4+ products increased to 40% from 37% last quarter, moving in the right direction quarter over quarter, and 6+ products were consistent at this 16%. So what I'm seeing from that is more and more of these customers are saying, wait, I've been using Datadog now for 6 months, 12 months, and I like this. Wait, you guys have this product too? Count me in, right? Like, oh, I'm using 6 products. Well, do you want to cut any? No, I like using all of them. They're very beneficial to me. I love it, right? And Josh, actually, can you throw on? I think that we've got some Bank of America estimates here. We'll breeze through this one quickly. But it's a quick snapshot I grabbed from a Bank of America an analyst report that shows kind of over the last 2020, 2021, 2022, and other estimates going through 2024, how their operating margin, return on equity, and more importantly, that free cash flow is looking to trend in the right direction, right? So what gets me excited is it seems to me that their free cash flow is going to double between now and the end of 2024. Really excited about that. Daniel, got any commentary before we get into the bearish cases?
Yeah, dude. So you made a lot of, I mean, we've talked about this frequently over the last couple of weeks, I feel like, is how, a lot of clients are looking to actually consolidate at this moment in time, and the thing that stood out to me, which I don't think you mentioned yet, is Datadog recently put out a security platform as well. So as you're talking about consolidating, and I mean, obviously we saw CrowdStrike's earnings last night and they projected weaker, kind of makes you think like, if this is your overall, top of the pyramid, look down on all your vendors, and Datadog is here presenting you with this opportunity to say, hey, we know you're using them, but you really like us, and now we have this product as well. That's them just taking up market share. And I think your strategy is what you laid out. What they do is they land and expand, right? You grab them on one and then you slowly extend. And so I think you're hitting it right on the head. There's going to be continued growth over time of more of their customers increasing the number of products that they're using in this company.
100%. And we have a comment here from Sen saying that Datadog is down 60% since their recent all-time highs. Have they hit the bottom? Welcome to the bearish case, Sen, right? So continued multiple compression with high growth stocks while interest rates rise and remain high, right? Datadog is no exception to the tech bubble that we've sort of seen because of interest rates growing or rising rather quite rapidly, right? And I do believe that is a downside risk, right? That the multiple compression will continue, and there's some images we'll share here in a bit. Another bearish case is the company operates in a highly competitive market, right? So they've got some peers and they have some really long sales cycles with that. Their international business might not develop as quickly as possible, and macro headwinds might continue to force small customers to optimize spend and say, hey, we're not going to be buying data or renewing our contract with Datadog. So looking here at a couple different companies, I think what's interesting is thinking about how these enterprise value to next 12 months revenue multiples have changed. If you actually don't mind going to the next slide, Josh, there should be a graph that shows over the last, call it 3 years or so, we can see, and shout out to Cloud of Judgment, go check them out on Twitter at Jam and Ball. And we can see from this graph, though, that how these multiples have absolutely been demolished, right? And what's cool about this is the graph breaks down high growth, mid growth, and low growth. The high growth median is Datadog, and it seems to be coming in at 8.1% right now across most cloud softwares. And the data we had just seen before that says it's trading around 11.2. So it's definitely above that average, or that median rather, right? So to Sen's question, has it hit the bottom? I don't know, right? I'd argue Datadog is a quality company. Their fundamentals are certainly moving in the right direction. So I'd imagine that they deserve to be trading at some sort of premium to the median. But on the same token, is the question now is, but is the median going to continue to come down? Which means, is that premium going to continue to
By
come down?
median, you mean the middle median or the low median?
The high growth median, the blue line right
High
there,
growth,
that
okay.
8.1%, right? So that is the, high growth is defined as more than 30% revenue growth year over year. Datadog is likely going to do between 35 and 45%. See you later. Thanks so much, Alan. Appreciate you
Thanks,
hanging out
Alan.
with us. But they're going to do this 35 to 45% revenue growth. That's great. And so from that perspective, I think we could see some continued multiple compression. The stock price could continue to move in the downward direction because of these rising interest rates. So we had a lot of images coming at you guys. I'm sorry if it was any overwhelming, but we want to share this to give you guys perspective on, Datadog is a growing company. They've got a lot of cool things going for them, but there are some risks. There are some things that are kind of I wouldn't want to use the word red flashing lights, but certainly things to be aware of as it relates to valuation multiples, right?
100%. Josh, actually, let's go ahead and take that off. I mean, you're talking about charts, but we got another chart to look at. We got to look at the actual share price. Let's go ahead and jump over and kind of look at what our moving averages are telling us, what Fibonacci's telling us, because we love to take a look. So I'm starting off here with the weekly chart just to get an overview of what's happened since this company came public back in 2019. Obviously, you were just talking about the median growth, right? And what happens with the growth sector when the interest rates rise, because your chart just shows it all. Is you take interest rates down to zero and you have all this money out there floating around, the additional $2 trillion that was printed and put into the economy as well. Well, you have to put the money to work. And so you put the money to work in growth. And obviously with this being a growth name, that's where we saw the massive move up to about $200 a share here. But ever since, we're in this downtrend line on the weekly. Let's go into the daily and kind of get more of an idea of what's going on underneath the market. So we have, obviously, all the moving averages are in a downward structure, like to a T, obviously the entire growth sector as well. Now, you remember I brought this up the other week when we were looking at the insider buying. It was 3 days here after the recent earnings announcement. And obviously, we talked about how by the time we did the episode, the entry point, the investor was already about 25% on his entry point with his cost basis. However, we pointed out the gap. So the gap has come down. The gap has pretty much filled here. I think there might be a little bit more of a ways to go. I'm not sure we completely filled it all the way. There still says there's about 0.6% between the top of this candlestick right here and where we are today. Obviously, at the bottom of it, yeah, it's about 0.64%. I like to wait until it gets to about anything under 0.3. I would consider a gap fill. And remember, once we see gap fills, usually there is 80% of the time a move in the opposite direction. So you might see it come bounce back to the 20-day moving average. But as we're talking about, compression of the overall market multiples is what we're watching here. I mean, I think the beta on this
Absolutely.
is pretty much 1.06. It's moving with the market. So keep that in mind. So obviously, if we see, there's this major support zone here, which is kind of like what we just broke through. And this goes all the way back to, March of 2021. And so once you get through, once you break that support, it usually becomes resistance. And what will happen is, obviously, we popped above and we came back under. So now it's going to act as resistance. And if we can't pop back above that, then you're not even going to see this 50-day moving average again. You'll probably see it fall further than that. And that's just from the technical perspective. But the next level, I would look below that. I mean, you got a little bit of support down here, about $63 a share way back from, what was this? Back in 2020, obviously when the market started to rip. So just something to keep an eye on there from a technical perspective.